Good morning, welcome to CurrencyChange Daily Markets Update on Thursday the 14th of November 2013. My name is Laurent Guilbaud, Managing Director at CurrencyChange.com, your local solution for international payment. The key event of the day will be the US FOMC member, Ms. Yellen's speech, which will be at 3 o'clock UK time. This could move the market. In the US, the US dollar index has slipped below the key level of 81 after having held on to that level for the past week. Although the pre-released opening statement from Ms. Yellen last night does reaffirm the market perception that Yellen is a dovish person, as she viewed at 7.3% unemployment rate is still far too high and inflation remained too low. There was also no indication of the prospect of an early end of the QE called the tapering, and this waiting on the US dollar last night. The Q&A session, which will happen today, will be closely monitored by the market. In terms of unemployment, which is still too high, and inflation is below the Fed 2% target, US market closed higher yesterday after this comments released, led by expectation that Janet Yellen will continue the central bank ease monetary policy and ahead of her Senate testimony, which is today. In Europe, the euro-dollar fell after some comments from ECB's press. In the Wall Street Journal article, it suggested that the ECB could adopt negative interest rate or purchase assets if needed to lift inflation. However, he viewed this was not needed right now. In terms of GDP, the French Q3 GDP was released this early morning on the weak side of expectation, while German GDP was as expected slowing down, adding to evidence that the euro region's recovery is flagging at the moment. Economic activity slowed in Germany and declined in France during the 3 months through September, indicating that this recovery seems to be faltering during the last summer. In the UK's annual rate of inflation fell in October to reach its lowest level in more than a year, a result which supports the likelihood that the Bank of England will continue for now its policy of low interest rates until unemployment reaches a key threshold. The pound strengthens against the dollar on yesterday, after the Bank of England speech from Mr. Carney said in its inflation report that jobless rate may decline somewhat faster than once expected. The pound saw support after this quarterly inflation report, and because it was predicted that the UK's unemployment rate will fall faster than it expected 3 months ago, and then there is a risk that a 2 in 5 chance that it could be 7% at the end of 2014, though the central bank reiterated that the unemployment rate falling below 7% would not automatically trigger an increase in interest rate in the UK. The underlying positive picture from the UK should keep sterling well supported at the moment. However, in recent weeks, we observed that sterling struggle on the top side despite some decent domestic data releases. For today, the key release will be UK retail sales, which will be the focus of the market. In terms of live exchange rate, we can sell you sterling dollar 160.42, sterling euro 119.14, sterling CAD 168.08, sterling Australian dollar 172.20, sterling New Zealand dollar 194. In terms of economic agenda, so we have the Euro ECB monthly report at 9 o'clock UK time, 9:30 UK retail sales for October, expected 3.1%. And then we'll have at 10 o'clock the Euro GDP Q3, expected at minus 0.3%, and at 3 o'clock UK time, the expected FOMC member Yellen speech. If you require further information, please visit now CurrencyChange.com. You can open an account for free with us with no obligation to exchange, or you can call us on +44 0207373 2686. Have a nice day.